Welcome back to Small Caps, and it is the fortnightly entertainment. No, it's the fortnightly information session with the wonderful Tony Locantro from Alto Capital. G'day, Tony.
Hey, Kerry, and wonderful's a bigger oxymoron than a happy marriage, I think, or a vegan treat. Let's look at those two.
Do you know what? It's one of the reasons I love these fortnightly catch-ups, because I always end up in a better mood after we've finished our conversation, because you always come up with these fabulous little commentaries, which I find quite amusing. Now, what I also find amusing at the moment, Tony, is it's kind of, we've mentioned it before, but it always feels surreal out there in the market. Lots of money printing going on. Joe Biden's in the White House. Go the money printing machine. We're printing it over here. We're printing it over there. You know, in Lebanon, the banks have shut down. I mean, the world is still in chaos, but there's people making a lot of money out of the chaos. Chaos, crisis, opportunity.
Certainly is. And I thought last month was going to be a record for me. Well, I've smashed that already. And I guess, to be honest, I'm a salesman, but I'm not selling people fold-away gyms or seniors insurance. I'm actually selling people the chance to buy a small company that becomes a bigger one. So I have no shame. And today, clients were taking a 7-bagger, part profits in Hammer. So what I'm seeing, unfortunately, is my clients are starting to get complacent, where they make 5, 6, 7 times their money. And the psychology of it is they don't like me ringing when I'm telling them to sell a windfall or take a 6-figure profit. It's just, oh, what if it goes higher? I'm sure if the Lotteries Commission rang you during a normal market and said you've won a share of Saturday Lotto, you'd take it for sure.
What do you think is the reasoning behind that? Is it, as you say, is it the psychology of, well, if I sell it, I don't know, let's just call it, for argument's sake, 20 cents and it goes to 40 cents. Oh, that's terrible. I mean, but it's not. You've made a profit. If you got in at 2 cents, you're 10 times your. What is it about people that just, they can't seem to push that button?
I think because human beings are inherently stupid and they all want to buy high and sell low. So I just see myself as a roadblock to financial ruin. So I'm just holding up this process where when an asset's rising, they think that I don't want to sell because it might, as you said, go up another few percent. There's always, I guess the highest point of client tension is the 1 or 2 seconds before I hit the sell button on someone taking a windfall profit. That's the highest. You know, it's like it's just like trying to reason with an ex-wife or ex-husband. You get absolutely nowhere. So I've just got to keep slogging away. Today was mentally challenging for me. I had a few stocks running. I had one getting belted, but I tried to convince clients, hey, it's getting belted. It doesn't change the rock formations. It doesn't change the fundamentals. Idiots are selling, buy it. And the only way to make a lot of money on the stock market is to own stocks. That's it. Pretty simple.
Yeah, it's interesting. I was saying to somebody just the other day that when you see people saying, oh my goodness, you know, the market's a sea of red, you know, I need to get out now, I sit there scratching my head saying, it's like going to a department store and seeing your favorite shoes on sale. You know, do you buy them when they're full price, or do you walk in and say, hey, actually, it's a good price now? Why wouldn't you? If the fundamentals are still there, and as you say, Tony, you've done the research for your clients. You know if it's a good or a bad opportunity. Just because it's selling off a little bit, that's an opportunity, not a threat.
Yeah, when I wrote my book, 20 years ago, I actually wrote an article on buying Mambo shirts in winter, because I used to love the Reg Mombasa Mambo shirts. So I'd just go in and buy a heap of them, and I always try and buy them when they're a little bit cheaper. But it's a strange psychology. It's strange to deal with people, because what I've learned over coming up to 23 years of advising is that a stock getting thumped is going to give you more of a chance to make a bigger profit. There's no good buying a stock at 20 cents and have it cruise at 22 cents forever. If the company's good, bring on that halving on a temporary smackdown. So what I'm doing with my clients is saying, look, the risks of the market are increasing. The Dow's been tiptoeing through the bloody tulips. The bond, look at the 10-year bonds, they're rising. So there's upward pressure on interest rates. Get yourself some bloody BBUS. I've now increased my portfolio weighting in that to 13%.
Okay, so let me stop you there. Just for those that do not understand, just explain the BBUS.
Well, it's a beta shares ETF that is negatively correlated with the Dow Jones index. So every 1% the Dow falls, this should increase between 2.25% and 2.75%. But where I see the real advantage for small cap people like me is that when your stocks are getting thumped, that BBUS will increase and then give you the funds to go in and buy good assets cheaply. And I just think that anyone that's mad on speculation, at some point, I'm trying to get my clients to just take a step back, look at all the money you've made. There's no way you'd have to live to 180 to spend it all. Take a step back.
Not me at the moment.
No. But how much money is enough? I've worked hard to put people in this position. Let's not blow it. Let's pay off some debt. Let's have a bit of insurance. You've got enough leverage. And look, I have total belief in all my companies. I've come through September 11, the tsunami, all the political unrest and everything else, but a good company always comes through. But
Yeah, just when you say you've been through tsunamis and all that sort of stuff, last March when the market dropped 35%, what was your thinking and what were your clients thinking at that point? Were your clients panicking at that stage and saying, sell everything, Tony? Or were they turning around, taking your advice and saying, it's a dip, let's buy?
I was fortunate that I had a few clients that were very well cashed up, and they were actually able to buy the likes of Hammer Metals for 1 cent, which hit 15 today. We're able to buy some of these biotechs. Narada got down to 11. I actually wanted to have a framed contract note for the pool room. So I spent about 10 grand trying to get the bottom, and I think I did it at 11. So when every correction feels as though it's going to be worse than the last correction, and that's what clients are struggling to grapple with. But I think, a biotech company looking to solve some health issues will survive that type of correction. But, there is a lot of shit on the market. There's a lot of regurgitated assets. There's a lot of paper, and a lot of these companies then go back to being a shell. And, probably they'll come alive when we have the chrysanthemum bubble.
Or the crypto bubble. We won't go there.
Kryptonite bubble, silver bubble, bloody childcare bubble.
We're going to talk about the silver bubble in a minute. But, I've been watching this week, the copper price is very strong, getting stronger. Base metals are getting stronger. We haven't talked uranium, but I know that Rick Rule, for example, is liking uranium. And I know that Deep Yellow just did a raising. Looks like they're getting quite a bit of interest. Do you think that this because we are in a money printing world at the moment, do you think that there's the potential for commodities, not the whole stock market, but I'm saying from a commodities point of view, we are in a long-term bull run? Or do you see that there is a bit of a risk and it's feeling a bit toppy?
Once you start to see rates lower for longer, stronger, the commodity super cycle, look, there's a chance of that. Copper, through 9,100, tin through 30,000 a tonne. You also look towards unattractive exploration commodities such as zinc. You've got political tensions, you've got shipping disruptions. Certainly these commodity prices could push higher. And as we've seen with the copper stocks in Australia, the speculative interest is certainly returning. And now, companies such as Fortescue have announced their move into hydrogen. So you're having a few little hydrogen acquisitions. So what I've noticed is even since dotcom, most of these acquisitions amount to absolute nothing. And all they create is brokerage and capital losses. So people watching this program should be mindful that all these stocks, it looks like a South American swimsuit parade. They all look attractive, but deep down, they're not. So I think the market is certainly getting a lot more dangerous, but there is going to be scope there for, if you have a major discovery, the market still rewards you, because the biggest discoveries in Australia were made during the crappiest markets.
Let's talk about a couple of those bigger discoveries and how that impacted the market. I mean, what was one that you can remember where there was a big change after a major discovery?
Oh, definitely Sirius. That was Nova Bollinger. I actually sent out an email. It opened up at 19 and a half, went to 24, back to 19. In that announcement, they called it a new nickel province, and then that ended up running to $5 on the back of that. Sandfire, when they drilled into DeGrussa, the female geologist was looking for potty gold, found a copper mine. Minotaur Gold, when they found Prominent Hill, they drilled into 100 metres at 3% copper, and you could have bought it all day at 28 cents. And then that turned into a decent deposit. Chalice, 12 cents to $4.60. And one of the surprising movers today was Lefroy.
Sorry, let me ask you about Chalice, because I'm curious. I'm sure other people are. Now, is that a platinum? Just explain Chalice to me, because it's really gone on fire. I mean, that Chalice, I remember they came and presented it when we could have face-to-face conferences. They were presenting their gold story at that stage. And I think their stock, this is back in 2019, was 19 through 26 cents, something around that. Today it's $4.60.
Yeah.
What's been the driver? Why? How? I kind of look at it. I particularly don't understand the Chalice story too well.
Oh, no, it's certainly a lot of good news is factored in. But when you make a discovery about 80 kilometres from Perth, you kind of have that flexibility that you don't have to build huge camps and have a fly-in, fly-out workforce. But certainly the PGE element is very exciting as well, along with the nickel. So, wow. What can you say? It's just an amazing discovery. And Alex Dorsch was featured in a story saying, I think he's 34.
Yeah.
Unbelievable. So, I mean, that thing just went absolutely nuts. But
does it still have, still got way to go, or do you think it's all factored in now?
I think that the best time to sell is at the height of the exploration excitement.
Right.
Companies will then start going into feasibility studies, scoping studies, more of a resource definition drilling, and they kind of become orphans.
Yeah.
So, we had one stock, Bellevue, which came out with a feasibility study and it fell off a cliff. Yeah. So you've got to look at the market caps relative to net present value. So I know viewers will probably have to go away and do a bit of reading on that, but some of these projects are absolutely priced for perfection, and you're best to sell into the top when someone says, oh, this is the greatest discovery of all time, and it's massively overpriced. So but I will say that when a discovery is made, you probably have a day or 2 days of dumb money selling that won't value it. So that was the case with Stavely. Yeah. That initially, I think we're all guilty of selling too early, and then it has that huge run once the smarter money comes in. So it's actually fascinating that when I get a decent drill hole result, I can contact someone or at least have a basic understanding that this thing's going a lot higher.
Now, today we had a bit of an explosion in Lefroy exploration. What happened there?
Big copper hit. One hole in particular. I haven't gone through the announcement completely, but I've seen where, you know, that hole got everyone's attention. The stock pretty much went from 21 cents up to closed at 69. So I think that's the type of market where anything with a pulse gets jumped on. Obviously, there's a lot of work to do. Some of the other holes didn't provide much in the way of results, but I mean, that was a quality junior. And, you know, the quality juniors are able to target these, they're able to drill these projects. But again, these can be quite nasty when a company, you know, makes a big discovery and then traders lose interest or they go ahead and raise money. So look, it's great for the sector, and we might have hopefully a bit of an exploration bubble because we're chocked to the brims with exploration stocks.
Well, we are, and I don't know, quite frankly, I don't know how you go through and choose them all, but then again, that's why people need to come to you, Tony, because you do all the work and can help them. By the way, ladies and gentlemen, you've got to do your own research, or you use somebody like Tony. But there's a lot of froth and bubble out there, and there's a lot of people literally saying, what's going to run tomorrow? They don't even know what they're investing in. They've got no idea. And most of these people are just turning around and going, well, you know, somebody told me that mining is a good sector to get into. They don't know the difference between nickel and copper. It's kind of frightening. And, you know, they see a little bit of red on the screen and they freak out, some of these traders. I mean, these day traders are maxing out at the moment, and some of them are making a lot of money, but some of them are going to be burnt, like in GameStop. Yeah,
and we've got stocks here intraday rising 500, 600, 700%. And that takes me back to a period there where we had 3 stocks up 1,000% intraday. Now, there are Facebook gangs, I call them Facebook hit squads, that do discuss stocks, and they go in and they're targeting a stock. And because I know, I actually spoke to one of them. And
did you?
Yeah. He phoned up and was boasting about how easy it is to make money. You know, who'd have thought he discovered self-gratification or the 11 secret herbs and spices? But
what was he doing calling you? Like, sorry, why was he calling you?
I guess not really. Well, he's saying he's making a lot of money and he doesn't know what to do with it. But I just said straight up, we are not compatible. I don't, you know, there's a Keno game on there somewhere. You know, but good luck to these people. Actually, I've got to commend the enthusiasm, and I hope he's doing okay. But, you know, buying these massively overpriced stocks on the open is just going to get you into a lot of trouble.
Yeah. Does it remind you at all of the dotcom boom? I mean, it's not quite, because I guess the dotcom boom, there was a lot of air literally in those markets and those companies, you know, trading at ridiculous valuations, and they literally had nothing. There are some of those in the market, in the commodities market, aren't there?
Oh, beyond. I was frantically advising during the dot-com bubble. I was writing hideous amounts of brokerage, buying and selling. Stocks were going through the roof. You had mining veterans that were announcing online liquor.com deals that were going through the roof. If you even put out an announcement saying management are dedicated to increasing shareholder value, we are looking outside resources, you'd go through the friggin' roof. And and in those days, all we had really was Merc Chat and a couple of online forums. So Merc Chat was where day trading groups would talk. You'd often get 150 plus people on there. But now we've got Twitter, Facebook,
LinkedIn, Snapchat. I mean, there's all sorts of things. So commodity prices, in your opinion, Tony, stronger for longer or?
Well, oh, Jesus, lend me a DeLorean with a full tank of plutonium on that one. It's, look, I think there's obviously a lot of volatility with the trading, probably some short squeezes to come. But let's face it, the exploration expenditure slowed up. There's been a shortage of new discoveries. A lot of the big copper mines now are 4 kilometers above sea level, under 1% copper.
Yeah.
So I think forecasting commodity prices is very hard. I just think I'd stick to the company first, because any discovery, regardless of what commodity it is, you're going to do well. So, I'm happy to stick with the precious and base metal companies.
All right. Well, let's talk about precious, because I'm a precious girl. Silver. A lot of talk in the market at the moment. We've heard about the silver squeeze. Let's not go down that road. But let's talk about some of the silver companies out there. I think that silver is still quite a good commodity, and it seems to me that there could be some opportunity out there. Your thoughts?
Well, I often called it the best commodity play you could have, because it's a precious metal and it does have uses as a commodity. And I just think that with the pricing and the tight market, that it's one that, if traders really get onto it, could run the living hell out of it. And that's what I like. And then what you'll start to see is the tweets about all the silver companies, their comparative market capitalizations. We saw Thompson go up quite a bit, red metal, silver mines.
Is red metals in silver? Tell me about red metal.
They have the Maronan deposit, which is lead silver, which equates to about 105 million ounces of silver. And what they're looking at doing is doing a 2D seismic to perhaps drill a bit deeper, where it does have the potential for a Cannington. So that's a big statement, but that's coming from other people. But yeah, sometimes the worst thing you can do with a silver deposit is try and mine the bloody thing. Same with uranium.
Why is that?
Because you get into production difficulties. You look at the uranium stocks, very few of them manage to get in production. You've got production issues with copper. You have some silver mines like the old Macmin. These assets just get regurgitated that have sent companies broke previously. And then you have gold operations such as Davyhurst, which has been a graveyard in the past. So,
and whatever happened, Tony? Whatever happened to Codeco? I remember seeing, millions of dollars, millions. This, ladies and gentlemen, was a copper play up in Queensland, and they built the most enormous plant up there. Is that just sitting idly waiting for a copper discovery? Do you know much about what happened there?
All I know is that my relatives were tipped it at a barbecue. So
danger.
We did have quite some bullish research reports on it. I haven't looked into the history for a while, but it was Wayne McRae, and
yes,
everyone was all over this, and Blue Sky Barry Dawes was all over it. I think Barry made some big claims that, Barry in his canary suit at Diggers, God bless him.
Well, we won't get into individual people, but I want to go back to silver.
Yep.
Do you think for those people out there, what would be your advice in silver? And then I want to get on to gold, and then we'll finish up.
Look, I really like silver. I think it's got quite a lot of upside. I think the stocks are still relatively cheap. I'm just thinking that there could be a little bit of a switch from crypto if a lot of these crypto, even though the Reddit GameStop crowd look towards silver, I still think there's the chance for that to have quite a decent run. And of course, being the poor man's gold as well. So I really like the upside potential.
All right, well, let's go over to the rich man's commodity, gold. Now, gold trading today at $1,815 US. That's probably around about 2,600, because the Aussie dollar has strengthened since we last spoke. But the gold companies, they can still make decent money at these prices. What's your take? What are you looking at?
Well, the producers, the major producers such as your Northern Star, Regis, Ramilius, Oceana have all pretty much been belted. And I think what we've seen is an institutional outflow into the banks and financials. Obviously, a lot of these fund managers do not want to miss out on their bonuses or be seen to be underperforming. So the stocks probably have overreacted to the fall in the gold price. But again, the major headwind is a bloody strong Australian dollar because of COVID. What you have a world economy struggling. So our dollar, instead of being in the high 50s to low 60s, is now heading towards 80. So that has buffeted a lot of these Australian companies. But I just think with these prices, you'll start to see companies go out and look to merge. I remember Jake Klein calling the renaissance of the mid-cap gold sector in 2012, and he certainly got that spot on.
Yeah, he is a very smart guy, good operator. And for those that don't know, I think he's the executive chairman of Evolution Mining.
Evolution, yeah.
Yep. Any final comments from today, what you've seen in the market, Tony? Any advice to those listening at the moment? And by the way, Tony is absolutely swamped with clients, but I'm sure maybe Tony, could you squeeze one or two in?
Yeah, it's funny that the bus is getting towards full, and I just want to at least know every client, like know your client rule. Look, it's tough, but as long as people can be patient with, the fact that my loyal clients take priority in the fact that I'm trying to help them at the moment through some massive wins and try and keep them level-headed, which is quite tough, to be honest.
Well, when the party's on and the merry-go-round is going faster and faster, it is very tough to keep people focused, isn't it?
Definitely, and the major killer of people financially is complacency. That's why I have to do pretty intense client reviews to say, well, look, we've made all this money. You've got to keep your portfolio working for you. Don't stick your head in the sand. Don't give me all these excuses, because I've heard every excuse there is. And as I said at the start of the interview, Kerry, all people are trying to do is go broke.
Well, hopefully not with your guidance. They're not going to go broke. Tony, no shame, Locantro, as you said earlier in this commentary. You have no shame. Do you know what? You have no shame, but you also call it when you see it, and let's hope that your clients listen to what you're saying. I think for the moment, the merry-go-round will continue. It will be interesting in the next couple of weeks to see where some of these prices are headed.
Oh, for sure. And it's going to be a dangerous market, and watch lists will start to look like a South Sydney Rabbitohs jersey. And that's the definite hard slog the speculative market is. And what I can say is that whenever I mention someone, it's always out of jest, and Barry's probably one of the best in the industry. So, we
love you, Barry.
We love Barry, and he was wearing a canary yellow suit, but I have a lot of time for Barry, and there's a lot of respect, and he's made some big calls, and he's been right. So, anyway.
Well said, my friend. Well said. Well, listen, it's crazy times at the moment. Let's hope some of these calls come off and your clients keep smiles on their dials. Tony, no shame, Locantro from Alto Capital. Thanks for talking to Small Caps today. We will see you back here in a fortnight.
Look forward to it.